Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Friday market webcast. All right, so jobs day. We get non-farm payrolls in about 45 minutes. Daily chart here, and you can see they continue to engage the upper Bollinger Band. Traded as high, I think it was 42.08, 42.09 yesterday. They've engaged with the upper band already this morning, so that band ride will carry itself into next week. What ends a band ride? One entire day without touching the upper band. I'll be interested to see what the reaction is to jobs. I mean, they took this, 42.08 half. They backed it off. The Bears are doing a good job overnight of getting below the hourly mid-band and then staying below it. It's kind of testing it now, that and daily pivot, so it should be interesting to see how that turns out. So yesterday really was just the tale of two trades for us. We had the long left over from jobs, which we took off pretty close to the open because we were trying some shorts against the 73 area. That was fine until the Bears demonstrated to everybody that they could not deal with the hourly mid-band. And after it blew it for like the third time, we ended up getting long around 58, and we took that up. Now, the bulls were not comfortable at all above 4,200. I mean, there's only so far these things are going to go before they need to come in a bit for profit taking, and to keep the weak shorts interested. Weak shorts are happy to be right one time out of 10. And if you're fighting this price all the way up, you're probably been right one time out of 10. But you'll only talk about the one time, rather than being right 9 times out of 10 and getting involved with price in the direction that it goes. That's just, if you are day trading and you are trading price, it is your job not to hypothesize or have a thesis. It's your job to be on the correct side of the freeway. That's it. Otherwise, you're just a splotch on somebody's windshield. Don't do that. Be the windshield. Don't be the bug. Bulls didn't look good above 4,200 at all. So after that came in, and then it demonstrated to us that it could really come in. We ended up short there. Not really for as far as I thought it would take us, because they still couldn't deal with that hourly mid-band. So it got pretty whippy in the afternoon, like little 10-handle moves get stopped out, little 10-handle moves and get stopped out, things like that. So a good day, but a day where basically from this 42.08 half print on, got really whippy into the end of the day. With jobs coming up this morning, we didn't really see, we didn't see any kind of a walk down or a walk up into the number. Maybe we'll see that over the course of the next, 40 minutes or so. But, I doubt it will be anything significant. Jobs comes out. Same deal as FOMC. Don't guess. Watch price. There'll be a reaction range. Trade it from there. I will be very curious to see what the volatility is like after the tape processes that number. It's been a busy week. And, we could see some chop, and we could see this market just kind of exhale in this little range around the 4160 to 4190 area for the majority of the day. My strong suggestion, if it does that, is to hit your number, get whatever you need to get out of the day, move on to Monday. Don't overtrade it. Don't try to make something not exciting into something exciting. It'll only be exciting for you and not in a good way. If the tape doesn't want to move, why do you want to trade it so much? That's a question you have to constantly be asking yourself. So if this thing decides to consolidate for the remainder of the day after jobs, I suggest you back away, and market will be open Monday. I don't have huge expectations for today. Now look, I change my mind as quickly as price changes its mind. This thing wants to run to the up or run to the down. Let's go. That's great. But still, by this afternoon, I doubt I trade much this afternoon. We're not going to trade much this afternoon. It's been a good week. It's been a busy week, and we don't have to be staring at 1 minute candles at 2:30, 3 o'clock in the afternoon on a Friday. We put in too much work the other 4 days. So volume weighted average price, basically 63.5. 5-minute mid 63, proprietary moving average 60.5, hourly mid 70 and change. Now look, I'll be watching hourly mid pretty closely off the jobs reaction to see what it wants to be. Hopefully it wants to be something, not a line that wants to get bisected for the next 45 minutes to an hour. If you get a downside reaction that wants to run, you got to pay attention to the roundy at 4,100, the 9-day, and that pre-FOMC price. It's very common. If not, it's not an always thing, but it's a pretty much always thing. This number tends to get revisited. It may hold as support, make the shorts look like idiots all over again, but it's very, very common at some point for this thing to get tested. If you get a reaction to the upside that wants to run, 4208 is one thing, okay? What you want to see then, if they do run it to the upside, is where are we at 4 o'clock? Are we closing with something with 42s on it, or are we heading back up and they can't maintain it and we come back in? The bulls are only going to get so many looks at 42s before they bring it in pretty good back to that 9-day pre-FOMC, whatever next week's weekly pivot is, early next week, to see, is it going to be yet another higher low, or can the bears kind of progress something to the downside? So, but, I can't stress enough, if it's door number 3 and they don't want to move it, don't overtrade it. Don't tear yourself up on a Friday. All right. Everybody have a fantastic day. Be safe, be healthy, take care, trade them well, great weekend, be good. Talk to you Monday.